Hi there, welcome to Kneppy Invest. Time to look at a company called Clover Corporation as part of my Kneppy's analysis series. If you do have a suggestion of a company you'd like me to feature in one of these videos, just leave that suggestion in the comment section of this video. Now, Clover Corporation is a company I have actually owned in the past. That was back in about 2017 to 2019. This company did face some pretty strong headwinds during COVID-19, but in particular 2021 when they were facing pantry stacking and COVID-19 restrictions, and those restrictions did have an effect on the demand of their products. Now, to understand Clover Corporation, you do have to know what DHA is. So before we have a look at their financial performance over the last financial year and a few other facts in regards to this company, let's talk about DHA. But before we talk about DHA, I always forget this particular slide. I am not a shareholder of Clover Corporation right now. It doesn't mean I won't take a position in this company in the near term. And if I do, more than likely it's just because of a financial breakout. And when I say financial breakout, I'm talking about share price breaking out on the back of good financial news. They did release a revenue downgrade recently. I won't talk about that particular downgrade in this video. I think that was released on Thursday, the 25th of May. So you can have a look at that. But I am not a shareholder of this company. However, I do have Clover Corporation in my watch list. And when I say my watch list, I actually have quite a few watch lists, maybe over 30 watch lists. So Clover Corporation is definitely on at least one of those, come to think of it. Anyway, on to exactly what is DHA. Now, DHA is docosahexaenoic acid, or a type of omega-3 fat. And you can find a lot of omega-3 fat in fish, like tuna. So Clover Corporation sell DHA oil and also DHA powder. I believe those are their two biggest products, if not their only products they do sell. And this is from the Journal of Nutritional Biochemistry, December 2019. Enrichment of brain DHA is highly dependent upon the molecular carrier of dietary DHA. So DHA, or just omega-3 fat, have a lot of health benefits, which I'll talk about in the next slide. And funny enough, I got this from a pregnancy website, but I just like the picture here, talking about the DHA benefits. So eye health and vision, brain development and cognitive function for the fetus or the baby, fetal growth and development, may support mental function throughout life, may help promote health, heart health and blood pressure, and visual function and development for the baby as well. Plus, DHA may improve or support maintenance of skin, hair, and nails, and there's plenty of other benefits as well to go along with these few here on this particular slide. The current CEO of Clover Corporation is Mr. Peter Davey, and he has held quite a few senior management positions within a number of manufacturing and distribution companies across numerous countries as well. And having experience in manufacturing and distribution is quite important for this particular role, because Clover Corporation manufactures and distributes their DHA oil and powder, is also head of the sales and marketing divisions of FMP Products and High Fert. High Fert was a joint venture between Elders and Landmark, which were Australia's two largest rural merchandise companies. Now to the quality of Clover Corporation. This is very important because I want to know the quality of this company before deciding whether I put this in the high quality bin or the low quality bin, which probably makes sense. Because I actually do treat high quality companies quite a bit different than low quality companies. And the main target is buying low quality companies when the share price is in a beautiful uptrend and hoping that company transitions from a low quality company to a high quality company. That is the ultimate aim when it comes to low quality company. And there is a possibility that Clover Corporation could do this over the next decade. So how do I determine whether Clover Corporation is a high quality company? The first thing I do is look at revenue growth. And I typically look at revenue growth over particular periods of time, trailing 12 months, 3 years, 5 years, and 10 years. Over the past 10 years, Clover Corporation have increased their revenue per share at 9.5% per year. That is maybe just below the target I am looking for. So I am looking at more than 10% per year, but I would take 9.5%. You might notice that the revenue growth or revenue per share growth over the last 5 and 3 years has fallen. In fact, the last 3 years, it's actually negative 0.2, negative 0.2 points, negative 2.7. And that's because of the effects of COVID-19. But in the trailing 12 months, revenue grew at 40%. So it does look like things are turning around for Clover Corporation as we have come out of COVID-19. Another thing I will look at is return on invested capital. And for Clover Corporations, that's at 13.5. I would expect that to climb over time as well. Hopefully, if this does transition to a high quality company. Gross margins about 30%, EV to EBIT 16.4. So that's screaming not that cheap, not that expensive either. And when I did calculate the total return for this company over the past 10 years, you get the exact same number as revenue growth. That's 9.5% per year. So that includes share price appreciation and also any dividends the company has had. Would you accept 9.5% per year? I think you would. I think that's a nice, safe number to expect for all companies you own in your portfolio. Hopefully, you'd get more than that. So I'd be aiming for, say, 15% per year. But 9.5 is pretty good for this company. And also, the share price has come down a fair bit over the past 2 years, maybe even 3 years. And if the company does turn things around or continue to turn things around, I could see that total return increasing from here. Now onto some financial numbers for the company, and this is the trailing 12 months. So if you don't know what trailing 12 months means, it's just looking at the last half year or the last 2 half years. So for this example, for Clover Corporations, it's the first half of financial year 23 and the second half of financial year 22, trailing 12 months. It's in the name. Revenue 85.4 million. It's starting to grow again. And we can have a look at the revenue history for this company over the last 10 years, and you'll see there was a bit of a dip in 2021 because of COVID-19. Profit 8.8 million. So this company is profitable. They're also generating cash flow in their operations. Operating cash flow positive by 4.2 million. Free cash flow positive 3.2 million. I would prefer those to be a little bit higher, and I wouldn't be surprised to see those numbers increase over the next few years. Return on equity, just like return on invested capital, above 10. That's the number I want to see. I want to see above 10 and the gross margins at 30.8. And I would expect that to grow, and there is a reason behind my expectations. So let's have a look at the revenue history for this company and also the gross margin history as well. And this is the revenue history of the company over the past 10 years. A beautiful uptrend in revenue between 2014 and 2020. And you'll be able to see the impact of that revenue growth on the share price or the chart. And I'll show you the chart later in the video. So remember that period between 2014 and 2020 and just translate that to when we look at the chart. You just see how important it is that companies not only increase their revenue, but also profitable and also increase their margins. So they've also increased their gross margins during that period between 20% or from 20% to 34%. Now, we have seen the revenue decrease in the last few years because of COVID-19. We've also seen the gross margins decrease. But because we are starting to see revenues increase again, I would expect gross margins to increase from here. So there are quite a few things to like about Clover Corporation. If you won't say ignore the last few years, but if you understand how COVID-19 had a negative impact on this company. And in this particular slide, we're looking at profit and also cash flow from operations. And the main thing to take away from this, apart from a really nice growth in profit and operating cash flow between 2015, 16 and 2020, this company has been profitable for every single year over the past 10 years. And there was only 2 years, 2016 and 17, that this company was operating cash flow negative. And not only have we seen improvement in the financial state of this company over the last 5 or 6 years, that operating cash flow has increased significantly. And apart from the last 2 years, the profit of this company has increased as well. Another thing I like to look at when a company releases the half-year or full-year results is just a breakdown of revenue by division or segment and or geographical region if they are selling their products or their services throughout the world. And for Clover Corporation, this is the breakdown of the first half financial year 23 sales into 4 distinct regions: Australia, New Zealand, Asia, European Union, and also the Americas. And there's a nice even split, not exactly even, between Australia and New Zealand at 35%, Asia at 35%, and European Union at 27%. Americas only account for 3% of their sales. So no doubt that is a market that Clover Corporation management is aiming for significant growth in their revenue over the next few years, maybe even the next decade or so. But without doubt, they are focused on Australia, New Zealand, and Asia right now. Clover Corporation is also a dividend-paying company, but as you would expect, because of a bad 2021 year, where these companies saw significant decrease in the revenue, profit, and operating cash flow, they also had a significant lower dividend. I would say that most people aren't buying Clover Corporation because of their dividend yield of only 1.2%, but I would expect dividends to be able to grow through time like they did between 2015 and 2020. In fact, dividends went from about 0.5 cents all the way up to 2.5 cents. So a nice 5-fold increase in dividends between 2015 and 2020. Now onto the valuation of Clover Corporation. And if this company doesn't grow much from here, you probably would argue that this company is overvalued. But I do expect a little bit of growth, maybe not a little bit, but a pretty good growth from here over the next 5 years. So PE ratio of 23.3, price to sales ratio 2.4, price to free cash flow 63.2. So this is one area I hope management do work on, in just increasing their free cash flow, increasing the operating cash flow. So I actually did do a reverse DCF based off their free cash flow, and this company, to be able to justify the current valuation, would have to grow their free cash flow at 28.6% per year. Now that may seem like a high number, but remember, free cash flow right now is on a low base. And I actually could see this company double their free cash flow, maybe even triple their free cash flow over the next few years, which would mean they could definitely achieve a 28.6% increase in free cash flow over the next 10 years. Another thing I do to see whether a company might be overvalued or undervalued is I just compare a valuation metric like the PE ratio, price to operating cash flow, or EV to free cash flow over time. So I look at the PE ratio right now and just compare it to where it usually sits for a company. So this is a PE ratio of Clover Corporation over the past 6 years, and very rarely does it get below 25. And if it does go below 25, it only stays there for a short period of time. We saw it for a brief period of time in 2017, also for a brief period of time in late 2020 and early 2021. And right now, we have seen the PE ratio of this company fall below 25. We actually have seen the PE ratio of this company get as high as 50 for one brief period in 2019. So if you do see a lot of multiple expansion for this company, you could just see the valuation, the share price of this company double from here without any increase in their financials. But I don't expect that. And the ideal situation is if you get financial expansion plus multiple expansion. And I think that definitely could happen for Clover Corporation just based off their PE ratio history over time. Now let's have a look at some charts. We'll look at the weekly chart here and then the daily chart in the next slide. And remember that growth period between about 2014 and 2019-20. Remember, the majority of that growth, particularly when you look at profit and operating cash flow, was between about 2016-17 and 2020. And the real uptrend in the share price for this company occurred from the end of 2017. So it took a little bit of time for the market to become aware of this company, because from 2013 to 2018, share price of this company went sideways, even though in the last few years of that period, this company had started to expand, started to grow at a really good rate. So the market took notice of this company late 2017, early 2018. Share price then was around about 50 cents. Share price then went from 50 cents to a high of $3.25 in the middle of 2019. And just before COVID-19, we saw the share price under a little bit of pressure. So that share price high for this company was in 2019, not in 2020 or 2021. And you could say or argue, just based off this weekly chart, the share price has been a downtrend for at least 3 years and possibly that downtrend has come to an end. And definitely you could argue that if you look at the daily chart. So let's have a look at the daily chart right now. So this is the daily chart going back to December 2021, when the share price was around about $1.80. And from that level, it decreased all the way down to about, we'll say 95 cents or just above 95 cents. And we saw a possible, very close double bottom. We saw share price get to 95 cents in June and also 95 cents in September. And the share price has recovered from those levels. But share price is going sideways now. Not a lot of volume either. So the market is unsure about this company right now. And then that profit downgrade, or actually it was a revenue downgrade, didn't really help matters a few days ago. So I'm still a little bit wary about this company. The market's still a little bit wary about this company. And I think the market wants to see some pretty good growth in their financials. So at this point in time, with the share price going sideways, and it has been consolidating for about 8 months since September. Is that 8 months? Yeah, about 8 months. What I probably would do is, if I was keen on this company, is just wait for a breakout in the share price. It did look like there was a breakout in the share price in February. You can see the share price starting to rise, but that was on low volume. So you want the breakout to coincide with good financial news and high volume. And that way, the breakout or any breakout or potential breakout could be sustained. The next 5 companies I plan to do in this series are AGL, Perenti, Lycopodium, and Mass Group. I've decided not to do acro for formwork. I keep wanting to say formwork, because if you notice these companies, they're all in the same space. So instead of acro, I'm going to do technology one. I'm surprised I haven't done technology one yet, because it is one of the highest quality companies on the ASX. If you do have a suggestion for a company you'd like me to feature in Kneppy's analysis video, just leave that suggestion in the comment section of this video. That's all I have for this look at Clover Corporation, a small cap company on the ASX that is profitable, that has operating cash flow and free cash flow positive, and has the potential to grow from here. Now, there's a lot of questions I do have about Clover Corporation, in particular the demand for their products. I don't know if it's just a bit of a fad in regards to DHA oil and powder, and whether that fad could continue from here, because I am not their market. I am not the sort of person who takes supplements. I believe you should be able to get everything you need in the diet you have. But I think I might be the unusual one, the odd man out, if you will, because I know a lot of people who do take supplements. So if you do have a suggestion for a company you'd like me to feature in a Kneppy's analysis video, just leave that suggestion in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.